Welcome to Finpod, your daily financial digest. I am Evan, and I am here to help you make sense of the market action. Finpod is brought to you by Fintwit.ai, your go-to platform for real-time trading signals from X and expert stock recommendations. Let us dive in. Rackspace Technology is buzzing today after announcing a major expansion of its partnership with Advanced Micro Devices. The two companies are planning to deploy 30 megawatts of compute capacity for enterprise customers in regulated industries through 2028. This strategic shift toward governed enterprise AI, coupled with a 15% workforce reduction to cut costs, has investors optimistic, sending the stock up nearly 5%. Meanwhile, Netflix is in the headlines for the wrong reasons. The stock slid over 3% today after reports emerged that the company failed to acquire ROKU, which was instead scooped up by Fox in a $22 billion deal. This is the second high-profile acquisition setback for Netflix, following their failed bid for Warner Bros. Discovery earlier this year. Finally, Snap is down significantly, losing nearly 10% today. The market was clearly unimpressed by the launch of their new augmented reality glasses, priced at over $2,000. Investors are questioning whether the high price point can compete with more affordable alternatives from Meta, especially given Snap's ongoing struggles to reach consistent profitability. It was a mixed bag today for the broader market. The Dow Jones Industrial Average managed to eke out a gain, closing at a fresh record high, but the S&P 500 and the Nasdaq both finished in the red. The weakness was primarily concentrated in the technology and semiconductor sectors, where investors seem to be locking in profits after a strong recent run. While there is cautious optimism regarding a potential end to the U.S.-Iran conflict, the lack of concrete details kept buyers on the sidelines. We are also seeing the market start to position itself ahead of the Federal Reserve's policy meeting, with investors waiting to see if there is any shift in direction under new chair Kevin Warsh. In the AI economy, the narrative remains focused on infrastructure. NVDA CEO Jensen Huang spoke today about the need for new social norms as AI adoption accelerates, emphasizing that the technology is essential for future economic growth. Meanwhile, the geopolitical landscape for AI is shifting. France announced it is moving away from American AI giant Palantir for its intelligence services to prioritize domestic providers, citing concerns over strategic autonomy. And in the U.S., the Trump administration has ordered Anthropic to restrict foreign access to its most advanced models due to national security concerns, highlighting the growing tension between AI innovation and regulatory oversight. Looking at other stocks in focus, CoreWeave saw a significant jump of nearly 10% today, driven by bullish analyst sentiment regarding its role in AI infrastructure. Conversely, Robinhood Markets trended lower after the company announced a round of layoffs, and Moderna shares got a nice boost on optimism surrounding potential FDA approval for its flu vaccine. Regarding earnings, Anderson Group reported their results before the open today. The company posted earnings per share of roughly 56 cents, beating the estimate of 45 cents, on revenue of $240 million, which also topped expectations. Despite the beat, the stock reaction was muted, reflecting a broader trend of investors demanding more clarity on future growth sustainability. That is all for today's market wrap. We covered the big moves in tech, the latest in the AI infrastructure race, and the mixed performance across the major indices. If you enjoyed this episode, please like, share, and subscribe to the channel. Drop a comment below if there is a specific stock or sector you want us to cover next. And remember, for stock recommendations, visit Fintwit.ai. See you tomorrow.